Welcome back. This is episode 147. In this week's episode, I want to address a question that I get a lot from clients, and that is, do you need to enroll in Medicare at age 65? And I still find there's a lot of confusion about this, so I'd like to clear that up. Before I get into that, I just want to remind everyone that my online retirement readiness course, Retirement Readiness Review on Demand, is now available on my website. If you don't have a plan for retirement or your plan needs some updating, consider signing up for my course. I will take you step by step on how to create your own plan for retirement and help you to feel more confident about retirement. And you can sign up by going to retirewithryan.com/on-demand. Or if you can't remember that, just go to retirewithryan.com and click on courses and then click on Retirement Readiness Review on Demand. And as a special thank you for being a loyal listener, you can use the code RETIRE25 and you'll receive 25% off the cost until June 1st. So I was meeting with a client just the other day. We'll call her Jane. And Jane is turning 65 in October, and she was very concerned about Medicare. She wanted to know, what she should do. What should she read? What should she learn about so that she does what she needs to do with her upcoming 65th birthday? And she works for a local hospital, and she's under the impression that she needs to enroll in Medicare because she's turning 65. And she is not alone in her thinking. I have many other clients that have told me that they have to enroll at Medicare when they turn 65, irregardless of their situation. So there are 5 things that you should consider in relation to Medicare when you're turning 65 that I want to take you through today that will help you understand that if you do truly need to enroll in Medicare when you turn 65. So the first thing is, do you have creditable coverage? And what that means is, generally if you work for a larger company with 20 or more employees, does that coverage that you have exempt you from enrolling in Medicare? Because if you do have creditable coverage and you're going to work past 65, then you don't need to enroll in Medicare. And this would exempt you from enrolling. Because normally with Medicare, if you didn't have creditable coverage, let's say you were retired or you were self-employed, work for a small company, and you didn't enroll in Medicare at 65, then you'd have to pay a 10% penalty for every year that you don't enroll in Medicare. So in that case, you definitely would want to enroll. But in Jane's case, Jane works for a hospital with more than 20 employees, and for her, she doesn't have to enroll. And we'll get into a few of the other things to consider and some reasons why she may want to enroll, but it is not a forced thing that you may be thinking, I have to enroll in Medicare, I'm turning 65. Well, hold up a minute. There's some other things that you need to consider. So the second thing to consider is, are you enrolled in a high-deductible health plan? Because once you're enrolled in Medicare, you are no longer allowed, nor is your employer allowed, to contribute to your health savings account. And as you know from past episodes, I am a big fan of HSAs because of the ability that they give you to put in money on a pre-tax basis, take a deduction, the money grows tax deferred, and then when it comes out, it's tax-free if it's used for health-related costs. So I certainly wouldn't want to see you give up the ability to keep funding that account until you retire. So if you are on a high-deductible plan and you want to keep contributing, then certainly don't enroll in Medicare because you lose the ability to do that. Third thing to consider is, would it be less costly to enroll in Medicare compared to your current health plan? It's possible that it might be less costly for you to go on Medicare than it would be your own individual health plan. Now, Medicare Part B, the starting premium this year is $164.90 per month. And for the first year that you enroll in Medicare, they look at your tax return from 2 years prior. So that if you have high income in years prior, then it's possible that you could have to pay a Medicare surcharge, is what's known as IRMA, an income-related Medicare adjustment amount. And so generally this is about $100,000 of income as an individual, or about $200,000 of income as a couple, would generally allow or would require you to start paying an additional monthly amount beyond the $164.90. Now Medicare Part B, that is what we're talking about enrolling in, that 164.90 doesn't cover the cost of everything. There's a lot of things that Medicare doesn't cover, out-of-pocket costs, another 20% coinsurance, for example. So for most people, they end up signing up for a Medicare supplemental plan, and this could cost you an additional amount of up to a couple $100 a month. So it's very easy per person. You could be looking at $200 to $400 a month for Medicare premiums. So you have to compare that to your current health insurance. If you're paying $100 a month for your current health insurance, then you might be better off not enrolling in Medicare and staying on your current health insurance until you retire if you're going to work past 65. So you want to look at that, what the cost is, and also what your deductible is for your plan. So the fourth thing to consider is your spouse on your health plan? So for Jane, let's just say her spouse is on her health plan and he's not yet 65. So if that's the case, if Jane enrolls in Medicare, she drops out of the employer-sponsored health plan. Now she's on Medicare. What does her spouse do? So the spouse in this situation would have a couple options. One option is that he could go on COBRA, which COBRA is a continuation of your current health insurance. So he could go on COBRA, that is the health plan offered by the hospital or the employer, and he could keep that up to 18 to 36 months, depending on the situation of when you went on COBRA. But the additional consideration with that is, what is COBRA going to cost? Because if you're paying $100 a month, let's say, for health insurance, that's not what COBRA is going to cost, because if you're paying a low health insurance monthly premium, your employer is supplementing a large amount of that cost. So that employer supplement will actually go away once you leave your health plan and you're now on COBRA. So in that situation, you need to know what the cost would be so that you could balance that out with Medicare to see if Medicare is going to be less costly. So it might be that it could be not good for you to go on Medicare if your spouse is going to have to pay a lot more to go on COBRA. Now, the other option is that your spouse could go on a individual health care plan through the Affordable Care Act, the Affordable Care Exchange. I've talked about that in past episodes, depending on your state, if they have an Affordable Care Exchange or you go to the federal plan. But there is a subsidy there, pretty heavy subsidies that are going until the end of 2025 that could significantly reduce the cost of your monthly premium. So in that situation, that could be more reasonable, more affordable than COBRA potentially. The other thing you have to consider with COBRA is that if you're doing this late in the year and you've already met your deductible on your health plan, then maybe you'd want to stay on that health plan, or if you've already hit your out-of-pocket maximum, because that way you're not going to have to pay any more money out of pocket for your health insurance. You'd have to pay the premium, but if you go switch to another plan, now you're on that new plan and you have new premiums that you are new deductibles and out-of-pocket maximums that you have to worry about. So lastly is that if you are not on a high deductible health plan, let's say you have an excellent health plan with low premiums, low deductible, then it could make sense to enroll in Medicare Part A. Now, Medicare Part A is free for most people as long as you or your spouse have worked at least 10 years in the U.S. You don't pay anything for Medicare Part A. So what is Medicare Part A? Well, Medicare Part A covers part of the cost of hospitalization. So if you wind up in the hospital due to a sickness, an illness, an accident, then Medicare Part A might cover part of that cost, whereas if you weren't enrolled in Medicare Part A and you were just on your employer health insurance, then you have to pay for that premium, or you have to pay out of pocket potentially to cover those out-of-pocket costs. So before you just enroll in Medicare Part B or even Medicare Part A because you've been told you have to, really give it some thought, consider these different situations, and get some help. Reach out to me, another health insurance expert, if you really are still confused about what to do with Medicare. So as a reminder, if you haven't gone to retirewithryan.com, you can go there and check out my on-demand course, retirewithryan.com/on-demand. Or if you are someone who enjoys YouTube videos, a lot of my podcasts I've been converting over to YouTube videos, so you can check me out there as well. And as always, if you have a question, please feel free to leave me your question by going to retirewithryan.com. Have a great week, and I look forward to talking to you next Wednesday. Take care.